Welcome back to Rockstock Channel. It is Sunday, October 9th, 9:30 in the morning. We're recording this kind of special weekend edition, given the Reuters article about Rio contemplating a bid for Arcadium, which we will talk about, at length in this video. But do want to flag, since we did our last Rockstock recap, I've been fairly busy. It was Climate Week here in New York. There was a lot of and the week prior to that was Arcadium's Investor Day, as well as a bunch of site visits to Sayona, Patriot, and Winsome Resources, as well as Arcadium's assets in Quebec, as well as Bessemer City. So there's a lot of Australian institutional investors and sell-side analysts here. I had an opportunity to speak with analysts at Goldman, UBS, Citi, BMO, Barrenjoey, among others, Petra Capital. We did record a site visit video for Sayona, which will be published this week. And we also recorded our first interview with Lithium Ionic. And Brazil was very much a hot topic at the Climate Week. I attended as well the Sigma Investor Day. And, as the Arc Equity Scoreboard, which we published last week, has shown, a lot of green, in the past month, calling it better bid. There was China stimulus that we're going to talk about that was maybe helpful there. There hasn't been that much help from the lithium price side, but sentiment's definitely improving. And from a lithium narrative perspective, the Brazil topic in the wake of Pilbara acquiring Latin Resources. I also saw Atlas Lithium there. Both Lithium Ionic and Atlas, I think, are interesting spodumene stories. So check out our interview with Blake Highlands coming up later this week. We also interviewed for a second time Craig Shesky of the Metals Company. Again, in Climate Week, there was a lot of talk about, seafloor mining and advancements. Climate Week was the same week as the UN General Assembly. So check that out as well. I'm not sure exactly where to start, but maybe a little bit, Rodney. You have any thoughts on kind of recent numbers? You tweeted about UK numbers, but there was Arcadium refreshed their lithium demand numbers to 3.5 million tons by 2030, which is higher than Albemarle, which had reduced it, I think, from 3.7 to 3.3. There was a great video done, on our friends at the Money and Mind podcast, Asian analyst YJ, who was talking, about very aggressive demand numbers, calling a lithium bottom, led by underestimates from many analysts on, EV trucks, as well as and buses, as well as, energy storage solutions. So why don't you talk a little bit about what you're seeing kind of just in the market there? And then I want to spend more of our time, fleshing out. I wrote a note this morning called Better Bid, better, another double entendre, better bid on the scoreboard. And maybe Rio's board saying we better bid for Arcadium now that the stock has moved a little bit, off very depressed levels. So, and before we begin and you start talking, Rodney, just want to remind all our viewers to like and comment on this video if you like it. And please subscribe to Rockstock Channel and the Lithium Ion Bull newsletter, which we publish every month. You can get that directly to your email box by going to our website and registering your email. And if you'd like, to contact Rodney and me directly, by email, or if you'd like some research on some of the companies that we talk about on this channel, please email us at rockstockchannel@rkequity.com or tag us on X. I'm at Lithium Ion Bull and Rodney's at Rodney Hooper 13. So with that, Rodney, what are you seeing, hearing China stimulus wise?
My demand numbers are similar to Arcadium's for 2030. I guess the thing we've always got to look at is it is a dynamic exercise, because if lithium prices are $10,000, $15,000 a ton, then lithium ion is going to completely dominate, EV storage all forms of transportation and so on. Whereas if lithium prices rise, then, sodium ion could come into the picture, and then that starts to impact on a number of applications. So, I haven't really changed my number. I think hopefully we'll still get there on the demand, through EVs. You know where I am on ESS. If you look at the targets, IEA, on renewables and so on, we can expect a massive amount of renewables, particularly solar. And if you look at the import data on silver going into China, into India, there's a huge amount being bought up. And the same for China, even, surreptitiously through doré bars, gold, silver, combos, they've been buying up everywhere. So the race is on to produce solar panels. So I do think you're going to need massive backup with that, with storage. So my numbers are still very bullish on that. On the stimulus, if you have a look, it's coming through a few ways. They're trying to recover the property market, which I did a tweet in the last week or two showing, property as a percentage of wealth in China is over 60%, much higher than elsewhere. And then the stock market is lower, but they're trying to boost the stock market and the property, because between those two, it's about 80% of household wealth. I'm not sure yet on the positive impact for lithium, but we know that China's built up an enormous production capacity for EVs and for batteries and for solar panels, for that matter. So they need to stimulate demand, and they're trying to stimulate domestic demand, but they're also exporting as fast as they can. But so far, we've seen the price of spodumene and lithium chemicals in China rise modestly. So we still need to see an impact. There have been some articles toing and froing about whether, Africa, there's going to be some issues around being able to operate at this price range. It'll be interesting to see. I've mentioned this before. Australian producers, now that we've had in the 700s to 800 as a spodumene price for some time, and let's see from a cash flow perspective, after all in sustaining costs, corporate overhead costs, listing costs, what cash flow balances look like. Howard, I'm sure you've noticed the short position on some of the shares, is still there. That hasn't gone away.
Yeah, I've been noticing, though, that the Pilbara numbers have gone down a bit. The MinRes numbers have gone up, thanks, a hat tip to Haplo on Twitter for flagging that. So there has been a little bit of short covering, but I guess, in MinRes's case, maybe there's some worry that they might shut Mount Marion. You've been talking about that was a subject of conversation on the site visits that I went on. What do you think about the likelihood of Mount Marion, MinRes, kind of putting that on care and maintenance? And do you think that would impact positively or negatively MinRes's share price?
Look, the grade is low, but the LCE effective is huge. So if it were to shut down, to my mind, that could almost balance up the market in one go. The question is, MinRes gets the mining services side of that deal. So there's some hidden, we can't separate it, but there is some, additional income for them outside of just the price. The question is Ganfeng up to speed in terms of being ready to start operating out of Mali? So if they can, and if they're operating, they might have a slightly lesser need. I don't know how Chris Ellison and MinRes would feel about shutting Mount Marion, given the volumes. But, I think if spodumene prices stay under 800, it's a possibility, given the grade. But certainly the number effective LCE, if that were to stop completely, would be helpful. And I guess the The question, Howard, as well, is we know that it looks as if Ganfeng did a block sale of Pilbara shares. So where is that money going to be applied to?
Yeah, it's interesting to that you mentioned that, because I was about to bring that up. I think they need money. I found it interesting that Ganfeng actually followed through on their $70 million investment in Lithium America's Pastos Grandes. So if you think about it, they got 15% of an undeveloped asset that's probably valued at zero inside Lithium Argentina. But $70 million was like 25% of Lithium Argentina's entire market cap. So I was a bit surprised that Ganfeng didn't renegotiate that. They essentially paid, a 400 plus valuation for that asset. But now they're having to sell their Pilbara shares, I think, to finance.
So sorry, just one correction.
Probably Mali.
It looked like when you look through the wording, it was some kind of, in my old previous life, some kind of derivative overlay. So I think there was some sort of guarantee, like a collar trade. I think, so this was, it looked like it might have been the execution of the delta, which was effectively like a net sale, but I presume there's some window, but they clearly needed one way or the other to be certain of a minimum amount they would get from that stake, because they clearly have that earmarked to be spent somewhere.
Right. Okay. Goulamina is going to be, Mount Marion has been Ganfeng's kind of baseload spodumene supply. Goulamina is going to displace that. Will be their most important asset. Doesn't mean that they won't still take Mount Marion feed, but they're the only ones who really value it and can are very familiar with processing it. So what do you think if they did shut Mount Marion down? Do you think it's a positive or negative to MinRes' stock price?
That's $1 billion question, Howard. I guess it would depend on the cost of the shutdown and how much they get in the mining services. But I don't believe on a fully all-in sustaining cost basis that they make anything if the price is in the 700s. So right. Then it comes down to what does it cost to shut down and what it would cost to go back up again. But you are effectively, although it is, if you look at the grades and how they've struggled there, but you are just depleting down an asset for no real income. So that can't be, good for anyone. So if it isn't too expensive to start up, I can't see that it would have a massive impact. I think the market at the moment is looking closer at iron ore for MinRes than they are for lithium.
Fair enough. I mean, if you're right, though, they shut down Mount Marion and it balances the market or maybe tips it into a deficit. Maybe spodumene prices go up a lot and they make a lot more money from Wodgina and Bald Hill and some of their other minority equity stakes that they have in many other companies. Anyway, I don't know what the calculus of that is. That would be a very difficult decision to put that on care and maintenance, but to be continued. Before we get into the speculation on Arcadium and alternative bidders and the like, just one other topic was this SQM International, the non-Atacama business, which is now basically Covalent, the joint venture with West Farmers and also Azure with Hancock, but they've also made this small investment in Andrada, in Namibia, as well as in Tolga in Sweden. What do this SQM International, there's been some talk that they might spin that off, and raise capital into that in a similar way, that Vale, has spun out base metals business. What do you think about that?
I mean, that's an interesting one, Howard. And again, with not having someone like Rios looking at that, I guess, is because there's some kind of a window and timeline before that'll produce. It's an encouraging sign that we're seeing, if the rumor mill is true, that we're seeing an interest in a ready producing company because they see more value there and a nearer term exposure to physical production. But yeah, I mean, SQM has been astute in its transactions, but it's an interesting timing to be coming to the market to look for a partner now, Howard, at this point in the cycle.
It is, but maybe it speaks to, I guess Mount Holland may need more money. Everything needs more money. I mean, it's someone I met, during Climate Week was telling me that they think Albemarle is going to need to raise equity again, by Q1, and they did last year. A few years ago, both Albemarle and SQM raised about $1 billion. SQM has not raised money. But I think it has more to do with just the restructuring of the agreement on the Atacama. I mean, SQM is only getting like 15% of the economics from that asset. And, their international ambitious, they still want to be a player, kind of internationally. But now that the table's set, and they're kind of capped out, in Atacama, maybe they see value in it's a different business and it's uninfluenced. They're able to do what they want globally. And you're right. They're very astute. They bought Kitman, Mount Holland pretty cheaply. They got into Azure early. They've been really good at getting good value there. So there's merit. But anyway, we'll see what happens there. Right now, it's all just been a little bit of,
but it's interesting how you've got a choice. You can either raise at the holdco level and put that money into international, or sell a project level or international level equity exposure as an unlisted, or farm in someone. So I mean, it'd be interesting to know if they feel they can extract more value doing it at an independent spun out international level.
Right, because their shares are so under pressure, because of Chile politics. So we'll see. But anyway, to be watched. We're now talking about like the major incumbents, making, strategic moves that are interesting. So, okay, I put out a note today, basically arguing that I think, this, the price of Arcadium is somewhat artificially low. The stock has underperformed Sigma and Pilbara. Our channel checks have shown us that basically the Australian shareholders in Allchem, are not particularly. The merger almost didn't go through. It had, so there was some resistance on, the exchange ratio and how things were meant to play out. There was supposed to be synergies between Galaxy and the Nemaska mine, and so there have been a few things that have kind of changed over the course of the year. This merger of equals, Paul Graves has articulated, because of the downturn, it's enabled them to actually accelerate the synergies, which means, more layoffs. And it looks to me, just from the people that I've interacted with, that the layoffs definitively took, much more on the Allchem side. So this merger of equals turned out more, as a takeover. I don't know if that is a reason enough for, let's say, the Australian holders of Allchem, to sour, on Arcadium, but you have seen, an acceleration of the share ownership out of the CDIs into the NYSE listed shares, which has translated or will translate into, LTM shares falling out of some Australian indexes, making it, a less relevant share, in Australia. And that aggressive selling pressure over the course of the year, I think, has exacerbated the underperformance of Arcadium. So that's an artificial thing. That's just like one shareholder for like another shareholder. I don't see a reason why Arcadium should underperform, Pilbara or Sigma, during this time frame. Given these are the three pure play lithium companies, and if you believe Arcadium, and I think Sigma and Pilbara, all three won't need to raise equity. So why, and Pilbara and Sigma are single asset spodumene producers, right? Arcadium does have a very substantial mix of low cost assets. And anyway, so I think it would be very opportunistic for Rio to be buying, at the very bottom of the market. I put some statistics in there when Arcadium or when Livent announced the merger of equals with Allchem. The share price was $10.50, right? This was like May of last year. And then at the beginning of this year in January, when the merger was finally approved, the stock price was $7.11. And so any price, it'd be very hard to swallow, as Paul Graves or Chairman Peter Coleman to say yes to a bid that is at this bottom of the market. So, but it would be perfectly opportunistic for Rio Tinto to kind of come in and lob a bid. And as I argued in this note, unlike Anglo, BHP, and Teck Glencore, Arcadium shareholder base is passive index funds and hedge funds, and there's no blocking shareholder of consequence. So absent an alternative bidder, they may have to present to shareholders, even if they recommend against it. And then the question is, who might alternatively bid? And in the run up to us starting this video, you made it. I forgot to add an option here in my note, was that you could have a Hancock-like Liontown scenario here, where you have a bid and then kind of someone comes in and buys 19.9 and blocks it. But right now you don't have any shareholder of consequence that could thwart a bid. But I'm hoping that the company can remain independent, or at least then there's a very active bidding war. So I listed a bunch at the end of my notes that I wanted to talk. I want to talk through a few of those with you, namely, Albemarle, POSCO, Panasonic, or Toyota Tsusho. So like Korea or Japan, versus Albemarle, the incumbent, possibly Hancock, also possibly Tesla. I think we made this argument a few years ago. If Tesla buys Albemarle, it's game over. Arcadium at the time had not merged, with, didn't have Allchem, in the company, so it was much smaller. But I think the logic, would still apply here, that if Tesla owned, their suppliers' assets, they could just be selling that lithium to them and have a permanent, competitive advantage. Not only, and, Elon Musk is buddies with Malay in Argentina, and you have Corpus Christi on the hydroxide side, needing spodumene, which they can get from IRA compliant Quebec. So we have Robotaxi unveil day, in 4 days later this week. I doubt that will come up, and, anyway, what are your thoughts on some of these other names? Tesla is like a speculation, but what do you think of the others I mentioned?
Yeah, I mean, I think, if we look at the number of people out of South Korea and Japan running around looking to do deals, that's an interesting angle, because they are resource, what would you call them? Challenged. They don't have any direct access. So to the extent that you still need high purity hydroxide in the batteries and so on, that's Korea and Japan. So, Livent having no skills. I guess it comes down to the question of wanting to be, exposed to mining companies, but they certainly would need to, it would be a good thing for them to secure some direct access. I guess the other thing, Howard, that you have to contemplate in all of this is, who is it earnings accretive to, or what would you have to use as a mid-cycle or long-term price in order to come down, to come out at some valuation that makes sense and it's accretive to the company that's acquiring. I think the battery guys, that's where I think your angle is interesting out of the rest of Asia, because they have higher valuation multiples. From a mining perspective, it's tough. I mean, there's a reason why Rios would be predatory or whatever, opportunistic in this, is because they trade at low multiples. And, we've discussed this many times about the backwardation in iron ore. So it always, the mid-cycle always looks lower to a lower price. So they're always trading on the possibility of a lower iron ore price that often doesn't seem to transpire. So there's a few things, to think about, but you make an important point about IRA compliant. But I've always thought that one of Livent's the appeal of it is the technical skills that sit within the company.
Absolutely. And I made a point, Citi's Kate McCutcheon wrote this note about replacement value, like it would cost $7.7 billion to build today what Arcadium has. But the reality is it's impossible to build 60 years of know-how and in a short period of time, right? So the replacement value is kind of theoretical. If the company was in distress, which it's not, you can kind of use that. But just look at how long it took Allchem to get their production up and running. Look how long it's taking, Lithium Argentina to get to, capacity, right? And this is just technical grade carbonate, let alone, the skills to make hydroxide and butyl lithium. And so Arcadium has scarcity value. You cannot, there's nothing in the very small lithium industry where you can kind of replicate that. Albemarle, and you mentioned, Rio Tinto should have, or maybe should, buy Albemarle. This was heavily debated by me and a few of the analysts in Quebec at the Sayona site visit. But my conclusion on that was that it would just, one, they'd have to sell the bromine and the catalyst business, but more relevantly was that Arcadium has majority control of its assets, whereas Albemarle has a lot of joint ventures, right? Greenbush is a joint venture, Wodgina is a joint venture, and sure, Rio Tinto has lots of joint ventures in lots of places, but it's a less clean and easier way to make the acquisition.
I think, for me, Howard, is a debate over the assets. They've got the Chilean assets, which they own completely, and that's low cost. And then you have Greenbushes, which is as good as it gets on the spodumene, going into China with the Mishan and so on. So they have a very good production base that's up and running now, I think, with capacity of 100,000 tons in China, plus the Atacama. So yes, it's joint venture, but again, it all comes down to, a lot of the argument around the valuation of Arcadium is this sort of, what is the long-term price of lithium, and then calculating some kind of an EBITDA. If you apply those same numbers to Albemarle, then a lot of the stuff that maybe looks mediocre is fine at those prices. If we're talking 1,400-1,500 spodumene.
Right. Fair enough. It's not another question that they would buy Albemarle. Again, they would have to sell off, I don't know if they want the bromine assets or the catalyst business. So it's not beyond them to be able to. So I'm sure they've penciled this out in a very significant way. The Atacama assets expire in 2039. That's 15 years. Like, how long does Rio look? I think Rio is very active in Chile, so they're familiar there. One analyst I thought that they might not do either Albemarle or Arcadium, but rather go greenfield because they've been shortlisted in Chile to partner with Codelco, on some high grade assets there. That's possible. But, look, I think Reuters quoted, 3 unnamed sources. They don't typically just put out willy-nilly articles like this. I think, as you pointed out, The market on Friday traded up 35%, which indicates that there's probably some fire, where there's that smoke. And let's see. So that's why I kind of wanted to get that note out over the weekend. It's possible we're going to wake up in a few hours, Australia time, or by U.S. time tomorrow, merger Monday. But I think it's going to be hard for this to be kind of like a friendly, accepting, bid, right? Like my sense is, Paul Graves, when I saw him at Investor Day, said he's been doing lithium for 13 years. Only 2 have been good. I think he said 8 or 9 have been very challenged. And 2 were somewhat, kind of mixed. The share price is well below the IPO price when the company was just 20,000 tons production with far less, growth, ahead of him. So I'm sure he has some, provisions. If you're the CEO, you get 2 or 3 years, pay. But I think he probably has I haven't looked to see, what his stock-based compensation was, but he's a young CEO, and I think he's not. The quote that I mentioned there, that for cash purchases, I think the bid ask is going to be very wide here. So he's a former banker in chemicals. I don't know what his M&A experience was as a banker, but he's, according to Reuters, retained 2 investment banks. And let's see, this could be a very significant kind of like defense scenario here. But the big question, this is a prize within lithium. There should be other bidders, but some of the bidders that we mentioned, or many of them, are somewhat challenged, right? Like Tesla has shown no proclivity to want to get into the upstream. Will that change? I don't know. Toyota Tsusho, by the way, is at least one significant shareholder in Arcadium, and in Investor Day, they did restructure their joint venture a bit. So, and Japan has become increasingly aggressive or they're catching up, on the EV and across the supply chain. They came into Frontier. I forget, there was another investment or 2 that they made. Panasonic made investment in Nouveau Monde. They're very active in Quebec. When Arcadium was speaking about, the process for selling 49% of Galaxy, the thought was that it was more likely to be a Korean or a Japanese than it would be a U.S. OEM. And we've corroborated that with some of the other U.S. OEMs that we've been speaking to, who have kind of slowed down their interest. So rather than a end user other than Tesla, there's a great opportunity, I think, for a battery company, or a cathode company, or both, to get some leverage in between the resource companies and the OEMs by having some vertical integration here. So POSCO's active in Quebec, POSCO's active in hydroxide, but both the Koreans and the Japanese are not necessarily super fast to kind of make decisions, in reacting to something like this. That said, Nippon is trying to buy U.S. Steel, and Cleveland Cliffs seems to be successfully thwarting that. I don't think this would have the same kind of U.S. CFIUS, kind of political concern, given the internationalness of the Arcadium business. So, POSCO Steel Company, Korean steel company, coming into lithium, that I think could be an interesting option. And then Hancock, has the money. The question is, like, who has the money? MinRes is strained right now. I doubt they would do it. Albemarle, I think, could be very interesting, and probably would be more inclined to do it, if not for their, they have some balance sheet stretch there. But I think, if they made a share bid, or cash and share bid, they could make a strong argument that, an American,
I think
national champion.
With the Pilbara Latin, I think people would definitely take Albemarle shares. They're very liquid. It's like getting a cash offer.
Absolutely, you could look at the low valuation of Albemarle shares and make a strong argument for that. So, but I think for Albemarle to do that, they would then say, well, we're going to sell bromine, we're going to sell Ketgen, to partially finance this, because they have their own. There is some worry that they will have to equity dilute, right? Right, getting in by Q1, given their current balance sheet. But if they said, okay, now is the time, we're going to have a transformational lithium champion, I think this would be great for the industry. Again, it would the balance of power. It would be good for lithium companies because there could be discipline across, the industry again. You expressed that there may be antitrust concerns, for this. Why don't we talk
No,
about
I mean,
that a little bit?
I just asked the question. I mean, you would then have pretty much the whole of North America in one company.
Well,
Other than now, I mean, I'm not sure how it works, but from a shareholder perspective, I mean, I would think people would be happy as Arcadium to take Livent shares and then get a combined, pretty cheap lithium company, pure play or close enough.
yeah, I think it would be very interesting for that to happen. That does Kent Masters have the kind of cojones to do it? We'll see. I think antitrust wise, it would get through, right? Because it's hard to argue in these depressed lithium prices that there's some market power in the market. If anything, the last few years has shown China is there's lots of supply of lithium all over the place, and US OEMs are happy to be buying from Chinese suppliers. So for the antitrust authorities to kind of make an argument and say there's not enough competition in the lithium space, I think it would be because, and they're looking through the prism of, they're going to dominate North America. I mean, no, that they need.
It might actually play into the security argument. Maybe a foreign bidder would be worse.
Absolutely. You know what? In fact, maybe Albemarle can go to the loan programs office and do kind of like a leveraged, buyout supported by the U.S. government on a security supply scenario. Anyway, that's unlikely.
I think what's interesting, and this is the theme that we've been discussing all along, is the lithium price is going to do what the lithium price is going to do. But ultimately, it's a question of what lithium price is embedded into the share prices and replacement value. And we've had this discussion. We're seeing more and more M&A pop up. So even though we're still bouncing around near the bottom in pricing, there's an interest, which means one way or the other, longer term, people are seeing, and we do see this, although it's more moderate in the GFEX than it is in the CME contract, is it is contango, it is upward sloping. The CME is steeper. That one way or the other, participants and those looking to do M&A have a view that the longer term price of lithium is up. And not by a marginal amount, by if they're going to see value in doing a trade and paying a premium, they're seeing it's quite substantially higher.
Yes. And again, in the note that I wrote, it was interesting that the 1.3 billion of EBITDA that Arcadium put out as their forecast for 2028 was based on, I think, 14 analysts, 12 to 14 analysts forecasts for spodumene at 1,400 in 2028 and carbonate at 18,000. And I was speaking to a very smart hedge fund manager at Climate Week who has played this market well, was short for much of this year. He said, if he thought lithium prices were going up, he'd be buying, Pilbara and Sigma. He still thinks 2025 is going to be challenged, but he thinks 2026, 2027, these forecasts like that are reflected in the analyst model that are in that note that show this kind of like steady rise upward He said that's not how lithium works, right? Lithium is just like crazy volatile, so it's more likely to be crappier for another kind of 6 to 12 months, but 30 to 40,000, by 2026, 27 was likely, right? And so it wasn't time to like back up the truck at the moment, in his opinion. But a time is going to come, and if that time comes, then Arcadium and the valuations that I put in that note, I said 11, 10 times EBITDA based on conservative scenarios. You think though that's too high a multiple? Fine, I'll take your point on that. I think specialty chemicals and their mix of business deserve such a premium, but if you're getting 20, 30, 40,000, prices, then they're going to get super normal profits, right? They're forecasting, I think, 48% EBITDA margins based on relatively conservative assumptions that are lower than what both Paul Graves and Kent Masters are saying are the incentive prices to invest in greenfield assets, ex-China. So, in any event, let's leave it at that. One thing I forgot to mention was you were mentioning, the CME futures. Another interview we did was with Fast Markets, Prez Kowaleski. So that also is coming out. So again, have a look at that Fast Markets video, as well as Lithium Ionic, the metals company, and Sayona site visit, in addition to this video, all coming out this week. And with that, Rodney, I've got to head out to the city to an event. It's now 10:30. Great talking to you this Sunday, and to be continued.